All right, let's get right into it. We're breaking down a fascinating analysis that's been making some serious waves online about the future of XRP. And it is a bold vision, let me tell you. It connects global banking, decentralized finance, and what could be a massive flood of institutional money.
So the whole thing kicks off with this giant question, and it was sparked by a pretty recent announcement from Swift. You know, Swift, the absolute backbone of international banking. They've just launched a new blockchain project, and it's got the crypto world buzzing, asking, hey, are Ripple and XRP the key missing pieces to this puzzle?
Now, here's where it gets interesting. The source we're looking at argues that even though Swift officially partnered with some other players, its actual long-term survival really hinges on integrating Ripple and XRP. The claim isn't just that it would be a nice feature for Swift, but that it's basically a do-or-die move to stay relevant in the future. And I love this analogy the source uses to capture its core belief. It says the partners Swift announced are like showing up to a rocket launch with a horse and buggy. The point is, they just don't have the proven, high-octane power needed for the future of global finance, not like the XRP ledger supposedly does. So the analysis really lays it out side by side. On one hand, you have Ripple with its battle-tested tech that's been in the trenches for years. It's got a whole portfolio of regulatory licenses from around the world. And get this, it already has a backdoor connection to over 13,000 Swift banks through a company called Tranglo. On the other side, the competition is seen as largely unproven in this specific arena. Okay, so let's move on to the next major piece of the argument. It looks beyond just traditional payments and dives straight into the world of decentralized finance, or DeFi. And this, according to the source, is where a huge pile of capital is just sitting on the sidelines waiting to get in the game. First off, a real quick definition here. What is DeFi? Well, think of it as a parallel financial system being built on the blockchain. The whole goal is to do finance, lending, borrowing, trading, without the traditional middlemen like banks. So the source claims that right now, financial institutions are sitting on $10 to $20 billion worth of XRP. And, just holding an asset is one thing, but making that asset productive is the real goal. And according to this analysis, all that capital is looking for a place to go in DeFi. And this is where a specific project comes into the spotlight, the Flare network. The analysis singles it out as the likely destination for all that institutional XRP. Here's why. A long-running airdrop, which is basically a free token giveaway that can push prices down, is ending in just a couple of months. With that weight lifted, the stage could be set for what the source calls a tsunami of capital to finally flow in. All right, now let's zoom out to the really big picture that this analysis is painting. It's this idea of the tokenization of everything. We're talking about taking real-world assets, stocks, bonds, real estate, you name it, and representing them as digital tokens on a blockchain. The roadmap that the source cites here is just explosive. It points to huge players like BlackRock and Franklin Templeton that are already building the pipes to put real-world assets on-chain. The projection is that this market is going to grow more than tenfold in just a few years, with stablecoins also rocketing up past $600 billion. So you might be wondering, if all these assets are moving onto the blockchain, how does the big institutional money get access? Well, the source points directly to a vehicle that we're all pretty familiar with, exchange-traded funds, or ETFs. And to really get a sense of the scale we're talking about, just look at these numbers. The global ETF market is a colossal $19 trillion. Right now, crypto's share of that is about $150 billion. That's a tiny, tiny fraction, not even 1% of the total market. Now, the analysis projects that crypto's slice of that massive ETF pie is going to grow to between 5 and 10% in the next 2 to 5 years. If, and it's a big if, but if that happens, we are talking about a monumental wave of new capital, potentially trillions of dollars, crashing into the crypto space through regulated, familiar channels. But here's the deal. For any of this to happen, for trillions of dollars to flow in, the regulatory foundation has to be solid. You just can't have that kind of money moving into an unregulated Wild West. It needs clear rules of the road. The analysis features this clip from a CFTC commissioner, and it's pretty telling. It suggests that key regulators aren't just aware of this tech. They see its incredible potential. The source reads this as a sign that regulators see blockchain as a tool for creating massive efficiencies, especially in super complex areas like collateral management. And the source really drives this point home, arguing that regulators in the US, particularly the CFTC, have been methodically building a clear framework. They point to this crypto sprint as proof, a series of very deliberate steps to bring digital assets into the fold with only the final technical rules left to complete the picture. So this all builds up to the source's ultimate vision, the end game. And that's using this new, regulated, blockchain-based financial system to simplify the largest, most mind-bogglingly complex market on the planet, the quadrillions of dollars derivatives market.
And as a little hint of where institutional interest is already heading, the analysis points to the actual ETF applications filed in the US. And you can see while Bitcoin is out front, XRP has the second most filings mentioned, which suggests there's some serious demand to offer it as a regulated investment product. So the big question, what does all of this mean for the price? Well, based on a scenario where capital flowing into XRP increases by 100 times, which would mirror the kind of growth seen in other asset ETFs, the source calculates a potential future price for XRP landing somewhere in this range. Now, that is a bold projection for sure, but it's one that's rooted in this whole thesis of massive institutional adoption. And that brings us to the end of this breakdown, leaving us with one final massive question to chew on. If the world laid out in this analysis actually comes to pass, with tokenized assets, institutional DeFi, and modern regulations, what would a financial system built on this technology really look and feel like? That is the multi-trillion-dollar question.